Markets can be classified on the basis of time period, which means there are certain commodities whose marketing period is relatively varying. So this classification of types of markets on the basis of times is a very short period market, then short period market, long period market, and very long period market. So let us look at a very short period or very short duration market. Well, certain commodities are sold in a market for very small period, a short period of time. The period can be from few days to few weeks. Examples like milk, eggs, perishable goods, vegetables. Now their life is very small. So period of transaction of those goods or commodities is small, very small, ranging from a few weeks to few days. Hence, markets for such kind of commodities is known as very short period market. Understand now, since most of these very short period market commodities are naturally grown, so their production all of a sudden cannot be grown, which means if there is increase in the demand for the specific commodity and its production cannot be grown as per the demand, since the production is fixed, therefore their supply is fixed. So automatically, if there is a higher demand, since the fixed supply is fixed, so the price of the commodity will increase. If the demand is less and the supply is fixed, then naturally seller will try to sell off all its goods and commodities before it or naturally perish. So in order to sell them, he try to reduce its price. The price of the commodity will decrease. So what do you understand? In a very short period market, there are commodities which are traded in the market for very short period, ranging from few days to few weeks, like egg, milk, vegetables, perishable goods, commodities. Their supply is most of the time fixed. Since the supply is fixed, so their price will be determined by its demand. Higher the demand, price will be higher. Lesser the demand, price will be lesser. Short period market. Well, a market whose duration for the commodities trading is neither very short nor long, which means commodities which are in the market and the trading happens probably less than 1 year, we know this kind of markets are known as short period markets. So in simple word, in short period markets, the trading cycle is generally less than 1 year. Since the duration is less than 1 year, so if the demand increases for a commodity, there are sufficient time to increase labor, capital, so those factors of production can be adjusted to an extent, try to maintain the demand and increase the supply. So, in a nutshell summary, what is short period market? Well, short period market is a market whose duration is probably less than 1 year, where input factors or supply factors like labors, capitals can be increased and managed to an extent, which helps us to handle increased demand to an extent. Product like spices, cold drinks, namkeens comes under this category. Long period market. Well, for certain commodities or certain markets, the market cycle is such that it is ranging from 1 year to 5 years. Such period is called as long period markets. So in simple words, long period markets are markets where it ranges from 1 year to 5 years. This period is such a long period that a manufacturer or supplier can adjust all its costs or factors of production. I'll explain how. Let us understand that I was making some product with some technology. Now I understand technology has improved. So I'll definitely try to adjust to that technology in that period of time. What happens if I upgraded my technology? Automatically my production cost will reduce. As my production cost will reduce, I think my profit will increase. So here, factors of production, all the costs can be handled since the duration is from 1 year to 5 years. This type of markets are known as long period market. Very long period market. Well, a market in which all input parameters are variable. The production cycle itself is very long, probably in the range of more than 5 years, is called as very long market. So in very long markets, products like machineries, it takes a very long time to build. So all the inputs are variable and production cycle is very long. Here, nothing is fixed. Everything is varying. These kind of markets are called as very long period market.